Rough times, rough times. So we got our crash, which we can all call it a crash by now, right? So next up, what is it? A recession? Bear market? Yeah, it very well could be, unfortunately. So let's look at some past recessions and bear markets and market crashes and figure out what we can expect going forward. History doesn't repeat itself, but it does rhyme. So let's do our best to figure out what has already happened to tell us what could happen. But before we get into it, heads up, the NASDAQ All-Stars trading system is open. So Momentum trading system, that's all automatic. Me and other Fallible members, we just get alerts straight to our phone and, email. And I'm very happy that I had this running during what just happened because it saved my ass. It was selling on the way up and sold everything before the crash. And now I'm real excited to use this system when the market turns around too. But anyway, open till Sunday. Check it out. There's a link down below in the description and comments. So we're going to go over an article from Ben Carlson, who's always very smart, great stuff. He has some solid data on all the past recessions and crashes. So he said recessionary periods typically produce some of the worst market crashes in history. The Great Depression, the 1937 recession, 73 to 75, the Great Recession, markets were all cut by half or worse. But you could basically split up recessions into three tiers. The first tier is the really bad recessions, like 1929 to 1933. Market went down 86% because, it was the Great Depression. Then there's that 37 recession that you don't hear much about. Market was down over 50% again. Then we had a pretty bad one in the 70s. Then, of course, the ones that everybody loves talking about, 2001 and 2008. Tech bubble and the housing financial crisis. You can see they were all close to or around 50%. And the length, like the Great Depression, was a very long one. The recession around there. But the rest of them are around, 1 year. So the average plunge in these 5 instances was 59%, but that number is skewed because the Great Depression was so bad. And the only one out of all of these crashes that didn't have to do with a severe economic downturn was that 2000s tech bubble, because that was really just an unwind of all the speculation. Pets.com. People were wild back then. Now we just fight over hand sanitizer and toilet paper. Much better nowadays. Next, we got your run-of-the-mill bear markets, tier 2. That tier 1, those were the monsters, the Great Depression. These ones are in the middle. So we haven't had one of these since the 80s. It's been a long time. And actually, Thriller was released in 1982, so couldn't have been that bad. Or maybe the market turned around once MJ released it, because you can't help but be happy, when you listen to MJ. So the average retreat in the stock market during those periods was a loss of 27%. Now, what we just experienced, we're in tier 2. For now, anyway. Not saying that it's over, but this is where we fall. Because from the peak to the bottom, or at least the temporary bottom, we're right around 30% down. And all those recessions that accompanied this much of a downturn in the market, they were all around 1 year. 1 year and below. So shorter than up here, which was all over a year for the most part. So maybe if we did not fall any further, we might see a 1 year recession. And I'm not trying to get into causation and correlation like this. This is just looking at history. This doesn't mean it's going to play out like that. It's not that simple, but I think this data still helps. Then here we got the corrections that never actually reached the technical 20% down definition of a bear market. The latest one was 1990. The average decline over these 4 periods was just 16%. So again, there's no way to know whether this is over, but as of right now, we're in tier 2, could see a recession of a year, but things could get a lot worse. Now, of course, the second question we would have is how long does it take for the stock market to come back to break even? If it's falling 30, 50%, what happens next? Because the length of time that we just went over in that article, that was of the recession, and the stock market and the economy don't go exactly hand in hand. I would say the stock market leads. So now let's take a look at how long it took for the stock market to fall and then how long it took for it to come back, which Ben's got another article about, which I think I just repeated myself twice. I don't know. I ended up going to the grocery store and only buying toilet paper, not food. And now all the food's gone, so I've just been eating toilet paper for 3 days. So I don't know where my mind is at. But here's some data. So in 1929, for the market to go down 86%, it took 998 days. And you'll see, as you go down this list, there's a lot of variation on how long it took for the market to crash. The shortest I can see is 45 days for around 20% back in 98. And this isn't including the Black Monday crash. So, okay, 45 days was the minimum. minimum. But then take a look at what happened to our market. 16 days, the thing collapsed almost to 30%. And this was a great graph because it compares what happened in the 2008 crisis, where to get to this point, to be this far down, it took a lot longer. See, this is days from the peak. So like I said, by looking at history, we're not going to know exactly what happens because it's going to be different. This is already very different. The speed of this crash is something, we haven't even seen before. It's insane. But if you look at all the data, there's been 24 bear markets since 1928. So you're good for one every 3 to 4 years. And the average fall has been a 33% drop, which lasted just shy of a year from peak to bottom. And I don't say trough because I don't know if it's actually trough or trough. I still don't know. So I'm just going to say bottom. So the bear market that we're in right now, or the crash that we just experienced, it's not even in the top half of the worst bear markets in history. There have been 14 larger drawdowns. So like I said before, this can still go lower, but that's where we are right now. Then we could look at how long it takes to get back to break even. So with the Great Depression, it took 13 years. Rough. But let's fast forward to something, more modern times. So the huge 2000 tech bubble crash where we were down 50%, it took 48 months to get back to break even, which is 4 years. For 2007, the crisis, down over 50%, it took 3.1 years. And the way he's calculating this here is with dividends. So it's not just pure prices. And then the more recent 2011, 2018 took 4 months to get back to break even. So the longest it took to get break even in the modern era, which is post World War II, that was the aftermath of the dot-com crash. It took 4 years in total. So the average break even is actually about 26 months or just over 2 years. That's since 1928. Now in the more modern era, the average is just shy of 17 months or a year and a half to get back to even. Half of all bear markets have seen break evens lasting less than a year, while 1/3 have taken 2 years or longer. So if we look at the average and consider the drop that we have, it might take a year and a half for us to break even if you were like buy and hold. Now, a lot of people are saying that they're really excited about the crash that we're having right now because it's a huge buying opportunity. And with that, I agree. But I also always question, what's your actual strategy? Because everybody talks about it like it's so easy. Oh, all these prices are down, so I could just buy everything, buy whatever companies are good. But first off, what if the market pukes another 20%? What if this turns from a 30% correction to a 50 or even more? And then everything you bought or averaged down on, it drops even more and your portfolio looks even worse. How are you going to feel? How are you going to react? We just went over how many times this has happened in the past. And we all know the stories of people losing it and their portfolios getting crushed. So I'm going to assume here that all those people probably thought the same thing, great buying opportunity. Buy more as it goes down. And at the same time, a lot of them, as it always goes with every market crash, you buy more and then all of a sudden you can't take it and you sell at the bottom and you end up even worse than you were before. Like obviously this happens, we know it. But also all of us, we think, well, that won't happen to us because we're too smart. We know what we're doing in the market. Well, that is not how I feel. Maybe I'm too stupid or too scared, but in my mind, I can't just go around buying when the market drops. For me, I need a system that's been back tested through periods just like this one, where I can follow the same rules I've always followed, whether it's a crash or whether it's not a crash, because I know over the full cycle, the returns are awesome and the risk is protected. That's the only way I can make a move in the stock market. Otherwise, I don't have the confidence. I'm too scared because there's too many unknowns. Not saying I know everything with the system, because you don't, because you're still going to take losses, but there's enough back testing and research behind the system to know the full cycle. What happens during a crash? What can you expect? Without that full cycle system, strategy, or plan in place, I can't do anything. I don't feel right about it. I can't execute in the dark. And honestly, I see a lot of people that are super sure in what they're doing, but then when you ask a little bit more about their strategy, it's not fully developed. And it's just like Mike Tyson says, everybody has a plan until they get punched in the mouth. And that's happened before in the markets. It's going to happen again. It's going to happen right now too. So that's why I use something like the All-Stars, which I was just telling you about. It's all back tested, all figured out. I know how it performs in markets like this. Right now it's up almost 3% when the total market is down 9% for the year. Pretty good difference there. So now I'm sitting here with a ton of dry powder because with the All-Stars, with how the trades went right before this crash, we were selling all the way up. So by the time the crash came, we were mostly in cash and we locked in a lot of the gains before they could be ripped away. That's why I'm still up. And like I said, I got all this dry powder. So yeah, I'm excited to buy too during this collapse, but I only feel confident in doing so because I got the strategy. And the whole profit taking thing I'm talking about is going to be so key if this is going to be an extended bear market, because the strongest rallies in the market, they don't happen during bull markets, they happen during the bear markets. But then guess what? The market goes up and turns around and collapses once again. So you gotta know know how to take profits. And with All Stars, it's all automated. It has that in place. And we're also all talking about the upside, right? If the market goes higher, but like we just looked at the numbers, it could easily go lower too. This could be a much worse crash, much worse bear market. That's the other thing about having the system though, because I have the risk control in place. Like I said, it's up 3% right now versus 9% down in the market. It already cut off this previous drop, and it will continue to do that even as the markets get worse. It's the risk management part that is so important in times like this. And then your dry powder keeps building and you get excited because when the market does turn around, the system really outperforms. So cutting off the tail risk and then jumping in when the market's better again is how you get an equity curve like this. That is way, way better than the normal market down here. 3 times better, in fact. And every time you have a big crash and bear market, the difference between these two lines grows even more, because that key is risk control. And that's another thing I like about this system, this momentum system versus other momentum systems, because when things are too bad in the market and the momentum turns negative, it's fine just staying in cash. And right now it actually looks like cash is the best investment because equities are getting killed, Bitcoin is getting killed, bonds are falling. Other momentum systems, they keep investing even as the market is going down, which is stupid. It makes the returns much worse. And I know you might look at a 3% gain for this system so far and be like, what? That sucks. Even though the market is down 9%, and it doesn't suck, it's great. And the reason I'm so happy about it is because I know there's no such thing as a holy grail system that just works constantly making money nonstop. Every system has a cycle. So this is a momentum system, right? An equity system. So if the market tanks, it's not going to be all of a sudden up 50%. When we get a crash like the one we're in right now, risk control of this system is what becomes so important. That's how it beats the market. And then when the market turns around again, then the system, the momentum, picking the best stocks and riding them the right way, that's how it way outperforms the market. And that's again why I'm excited about the rebound too. I don't know when it's going to come, but it will come. And with the All Stars, I know I'm going to be in the best stocks, the highest momentum that are going to make the most money. So that's how I prefer to do it, so that I feel confident even if we have a huge bear market or whatever is going to happen, because we don't know. And all our fallible people using the system, they feel good about it too. So you can learn more about it on this page right here. There's a link down below in the description and comments. I explain more about how everything works. It's really the best time to get in right now and learn how to use this system and get ready for this rebound. And like I said, I just love having the full cycle system with the data, and I know what is going to happen. Not exactly what's going to happen, but over the full cycle. Sleep like a baby at night. But check out this page before Sunday because we're going to shut it down. Link down below in the description and comments. And make sure you subscribe to this channel because we got more videos coming. It's Crash Watch. It's so exciting and exhausting, but I'll keep you up to date on all our research from macro ops and everywhere else. Subscribe, hit that notification bell so you get an email notification, and I will see you in the next video. Stay fallible out there. Bye.